Hey folks, welcome to another video by Stocktrades. My name is Matt, and today we are going to be looking at two more renewable companies. We know that the last one went over quite well, so today we're going to talk about two more renewable utilities and ones that we really haven't talked about too much thus far. Before we get to that, really hoping you're enjoying our ETF series that Dan is putting together. Please comment below, let us know if we're on the right track in terms of content. Dan right now is focusing on some ETFs. I'll be focusing on some individual stocks and the usual dividend updates, but please let us know if we're on the right track and if we're producing content that you want to know. So to do that, like our videos, subscribe to our channel, and comment below and let us know how we're doing. And now let's get to the two renewable stocks that we're going to be looking at today. Renewable companies have been among the hottest on the TSX index. We are seeing many pro-government agendas come forward, and there's a lot of investment being put forward towards renewable energy. So it's not surprising that renewable companies themselves have been quite hot over the past year. In fact, most are returning double digits. Now, recently we have seen a little bit of a pullback. There has been some issues with some, renewable energy in Germany. We've seen what's happening in Texas with that cold snap, and it's having a real big impact on their electricity generation out there. However, overall, the shift towards renewables is progressing, and there is no stopping this big train. The renewable companies themselves are going to be strong investments for investors moving forward. The first company we want to talk about today is Innergex Renewables, and it is one company that doesn't quite get as much attention as it deserves. The reason why it doesn't get as much attention is likely because it's one of the smallest renewables on the TSX index. With a market cap of approximately $4.8 billion, Innergex is a 100% renewable energy company, and it operates in three segments. Hydroelectricity, which can be created by harnessing energy from running water. This type of energy is known to generate large amounts of power and is the most widely used source of renewable energy today. Wind, which is largely characterized by their large turbines. Wind energy is actually one of the fastest growing types of energy in the world today. And finally, solar, which was once a very cost prohibitive energy alternative source, it is becoming more viable source of energy. And as the company puts it, it is the result of the most abundant and unlimited resource known to man, which is the sun. Innergex has operations worldwide and has 75 generating assets with installed capacity of approximately 3.7 megawatts. The company has also approximately 7,000 megawatts of capacity in its pipeline of projects, with some flagship projects in Hawaii, Saskatchewan, and, as we mentioned earlier, Texas. The company's robust pipeline of projects has enabled the company to reach a record production numbers this past year. Through the first 9 months of 2020, it generated 5.886 gigawatts of energy. This is up 25% year over year. The majority of its production increase came from wind and solar power. It has put a few projects into commission and closed on several acquisitions. While earnings growth is spotty, analysts do expect the company to grow revenue by the mid-teens over the next couple of years. So strong growth out of this company. Another aspect of the company that might get overlooked is that it is becoming a reliable dividend growth company. Innergex achieved Canadian Dividend Aristocrat or All-Star status a couple of years ago and now has a 7-year dividend growth streak. The company won't blow you away with its high dividend growth rates, but it has managed to grow the dividend by the low single digits year over year. Since the company has generated negative earnings, the payout ratio against earnings is nil. Looking forward though, it is a hefty 225% based on next year's estimates. So you might ask yourself, is the dividend at risk? I wouldn't necessarily go out on a limb and say with 100% certainty that it's safe. But according to the company's latest presentation, the dividend climbed to 124% of free cash flow. In fact, it has increased every trailing 12 months since 2018. So this is definitely a warning sign. The company also has a number of construction projects in the works and has a pretty high debt load. While a high debt load is not all that surprising, given the industry in which it operates, the payout ratios definitely pose some concern. It's worth noting that Innergex is on tap to raise dividends this coming week. So as I'm filming this video, Innergex will have either kept the dividend steady or raised the dividend this past week. A lack of a raise might be a signal that the company's financial position is a little stretched. While a dividend growth streak is definitely a bonus, many of its peers have chosen to keep the dividend stable over the past number of years. In fact, Innergex is one of the only pure-play renewable power generation companies that has grown the dividend for more than 5 consecutive years. That's aside from Brookfield Renewable Partners. So it might be time for the company to follow suit with its peers and prioritize dividend stability versus dividend growth. So all things considered here, Innergex Renewable is a very interesting and high-growth renewable company. However, if you're looking for it in terms of generating stable and increasing income, it certainly does raise a few red flags. I'd be concerned here. The dividend does look a little suspect. Is a dividend cut on the way? Not quite sure. By the time you're seeing this video, the company may have or may not have raised dividends over the past week. So we'll see what happens. Either way, this is a very strong renewable company. It has nice growth rates and it's expected to continue growing at a double-digit rate. It's just a dividend that looks a little suspect to me. Overall though, solid company. Next, let's take a look at the smallest renewable on the TSX index, which is Boralex. I know what you're thinking. Boralex has a market cap of around, $4.5 billion. It's not necessarily the smallest renewable in the TSX index, but when you compare it against its other power generation renewable companies, like the Northland Powers, Innergex that we just talked about, Brookfield Energy Partners, TransAlta Renewables, it really is the smallest. And as the smallest, it's actually been surprisingly one of the best to own. Boralex has been one of the fastest growing in the industry. Over the past 3 and 5 year periods, the company has managed to grow revenue and operating income at an average pace greater than 20% annually. That's the highest growth rate among all of its peers. Typically, when you look at growth stocks, a growth stock is defined as having an average growth rate north of 10%. So the fact that Boralex has been able to grow at such a pace for such a long time is actually quite impressive. It's also not surprising that this rapid pace of growth has also led to the company's outperformance. If I was to ask you which was the best performing stock in the renewable sector over the past decade, you might be surprised to know that Boralex comes out on top. It has returned more than 400% over this period, which tops peers that we've previously mentioned. In fact, it has delivered investors double-digit annual returns every year since 2012, with one lone exception. That was a 26% loss back in 2018. And they weren't alone that year. The majority of renewable companies suffered a big loss. Now, can the company continue this outperformance? That's what investors are really interested in. Analysts expect that the company will post 10% annual revenue growth in fiscal 2021. But that rate drops to approximately 5% in fiscal 2022. These are well below the company's historical averages. It appears that as the company is maturing, growth is also slowing. So this isn't surprising. The bigger a company gets, the harder it is to match its historical organic growth rates, unless it does so through acquisitions, which is still a possibility for Boralex. The good news is that the company is expected to reach a new era of profitability, as net income is expected to jump materially from historical levels. This is also a sign that the company is in a new stage of maturity. What about the company's status as a dividend stock? As we talked about, renewables and utility companies in general attract investors because they produce high income. So what about Boralex? Well, the company's primary focus has been growing the asset base. And because of this, the dividend growth rate has been quite spotty. As you can see in the charts, Boralex last raised the dividend in 2018. And it has been kept steady at 65 cents per share ever since. It had a mini 4-year dividend growth streak between 2015 and 2018, but growing the dividend simply hasn't been a priority for the company. Now that the company is expected to become more profitable, will dividend growth return? It'll be one to watch, as the company's strong performance has negatively impacted the company's dividend yield. At a rate below 2%, as you can see, it is the smallest among its peers. And to be honest, not many income investors are going to be interested in a company yielding below 2%. This is especially true in the utility industry, which attracts income investors. Another point worth mentioning is that the company really does appear to have gotten ahead of itself in terms of valuation, more so than some of its peers. Despite the recent pullback, Boralex is still trading well above historical and industry averages being the key here. A premium was likely deserved when it was growing at a 20% clip. However, now that that growth is expected to slow and be more in line with the industry average, the company does look a little expensive here. Not that the company can't grow into its valuation, but investors should not expect the same level of capital appreciation it has come to expect out of Boralex. Overall, Boralex is a really solid company. It's been one of the best. However, as growth is slowing, the company is becoming more mature. So as it matures, you would expect less growth. One clear sign of maturity would be the company refocusing its efforts on increasing that dividend. Now that growth is slowing and net income is rising, I would expect a company to put more focus on getting that yield up to a level that is more in line with peers. It's missing out on a pretty big investor base with a low yield like that, and income investors are particularly attracted to the utility industry. They're looking to transition from traditional utilities to those that are based on renewables. So if Boralex is going to attract that investor base, it's going to have to do something about that yield. Overall though, once again, it's a solid company. It is a little expensive here, and it's one that I would perhaps wait for a little bit more of a pullback. And with that, we're at the end of our video. We have two companies today that we looked at, Innergex and Boralex. Both are interesting companies actually, and they're kind of a contrast to each other. We have one, Innergex, who's going to be continue growing at a double-digit clip, but the dividend's a little suspect. And on the flip side, you have Boralex, who is going to be seeing slowing growth, but which the dividend is well covered, but it's also not all that attractive. So kind of an interesting contrast between the two. Personally, I don't own either of these companies. My renewable plays include TransAlta Renewables and Algonquin Utilities. Algonquin is less of a pure play. It's more of a traditional utility plus exposure to renewables. However, it's often lumped in with renewable companies, but it's important to note Algonquin is not actually a pure play renewable company. Overall, though, these are two good stocks. Both have their benefits, their pros and cons, if you will, but I'd be interested in hearing your thoughts. Do you own either of these companies, or which is your favorite renewable? Let us know in the comments below. And as always, please like the video and subscribe to our channel for more great Canadian content. Until next time.